What is the tax authorities' outlooks? Now, this is worldwide. Concern among the various authorities is really tax evasion is on the uppermost in their mind, tax avoidance. How do we curtail? How do we, put a stop to what they perceive as schemes which are not sustainable? Concern is that, all right? And also there are concern among the various authorities, be it Japan, be it the UK, Canada, and the US, about international schemes involving companies across borders and so on. And then there has always been the last 5 years this issue about usage of international offshore financial centers and all that, and which led to a lot of developments by the OECD, and therefore which this eventually led to also an OECD project called the Role of Tax Intermediaries. But this report that came out was quite neutral. They did talk about tax professionals, tax agents, bankers, and so on. These are intermediaries who come up with schemes and so on. But in the end of the day, the OECD did not recommend anything except to say work together so that more information is available and people are aware. And at the end of the day, there is a lot more international cooperation among tax authorities around the world. I think we are familiar with this. It has just increased over the last 5 years, tremendously compared to in the past, where we all may think each authority is on their own, they don't share information with the other countries. Believe me, they can, they will do, but subject to certain rules. All of you have heard about the Tax Information Exchange Agreements, TIEAs, which is a new phenomenon in the last couple of years because of the OECD's push effectively about IOFCs, International Offshore Financial Centers, and they have negative views about this, and therefore came out with this issue about greater information exchange must be allowed among countries in relation to your tax obligations and liabilities. Malaysia has also gone on board. We have signed almost 15 effectively tax information exchange agreements, but some of it is true protocols to existing double tax agreements. A few of them are separate TIEAs with countries with whom we don't have a double tax agreement. We're not the only ones. Every other country has signed that, which is therefore telling you that international cooperation, exchange information, is something that is definitely going to increase even further. So if you're looking at saying that one company in one country does something and the government of another country will not know about that, will not ask you for more information from the Malaysian authorities, be aware that they can. Where they have reason to be. They simply cannot ask for information. There has to be a reason for it. It has to be in accordance with some tax obligations, liabilities. So we're seeing that Malaysia is a party to this. Malaysia has signed all these agreements, and therefore greater cooperation exchange is a reality. Now, when you're looking at tax landscape in Malaysia, in general, we all know the current situation in Malaysia at the moment is there's a greater push for tax revenue. Okay, and it makes it even more interesting when you have a new leader heading the Inner Revenue Board, who has obviously at the back of his mind, with due respect to him, he's a good friend of mine, the days when I was in Inner Revenue Board with him as well. He's one eye on the fact that he'll get a renewal of his contract in due course, right? So when somebody has this thing on your mind that hope I will get renewed as the Director General, you better do well. And the only way he can do well is if he produces more tax revenue so that the Ministry of Finance will say, yes, we'll give you a new contract after your term ends. That's reality. Just like any other corporate leader, we'll make sure your corporation does well, good returns. I think you have your future at least covered for a few years. So we are seeing that this push for tax revenue will continue in whichever way. It could be through higher penalties. We have seen that happening, right? Filing of returns, late returns, some of us thought it's only 200 ringgit, 300 ringgit, turns out to be, in some cases, 10,000, 20,000. The unfortunate part of all this is that we all are supposed to be pre-warned about this. That's what the professional bodies are there for, but we were not. All right? And so these are some of those things. So you're beginning to see a kind of a trend in this so-called new leadership in the Revenue Board. That we'll do it, we'll tell you later. We'll do it first. And then we'll let you know. Then you cry and rave and rant, and too bad we have the law behind us. That's a kind of strangely, unfortunately, but I think things will change a little bit because we'll try to make it calmer. So be aware that this is going to happen, it's not going to go away. We see increased scrutiny on tax audits, yes. That's one of the ways to try to recover more revenue, although the motive in tax audits is to ensure that you are, your record keeping and your compliance is in accordance with the law. The motive is not to collect revenue, but unfortunately in every country around the world when you do a tax audit, there is a motive to try to find something to then collect revenues. That's going to go on. Another interesting thing has happened is in terms of tax investigations. Tax investigation cases, I think now is the time for you to go and try to settle and work out a settlement within the Revenue Board. Because faster the better, more revenue comes in, good results, everybody looks good, except the client. So things like that. So this is just the shorter, easier ways to collect revenue, okay? I'm not saying you don't stand by your technical arguments, you should. But sometimes businesses take decisions, commercial decisions. Look, do I want argument to go on, do I want to go on to appeal and so on, or shall I just settle? But you can settle, but settlements sometimes have impact on the future. And the treatment of the same item in the future will come back to haunt you if you have agreed to a particular treatment for those years under investigation. So you need to be very aware of that, or work out whatever arrangements you have or want to with the authorities. So higher penalties, we all know, there's continuing consultation between the professional bodies. But there's a but there, because in the end of the day, the consultation seems to be a one-way street. But nevertheless, I believe in consultation. I believe the professional bodies have achieved quite a bit. And that will be obviously an option that we have to continue to engage. Will there be more legislative provisions? We've already got transfer pricing, thin capitalization provisions in the law, and I foresee that there may be in the future some more changes, which is really meant to curtail avoidance and so on and so forth. We will see legislation in the next 5 to 10 years change a bit. There's also perhaps in the next 5 to 10 years, and maybe it probably will only take shape in 2020, our intention to look at a broad-based capital gains tax in Malaysia and things like that. But that will only be feasible if we are a developed nation, and then probably that will be a right time to look at it. Not when we are developing and trying to encourage more investment. A broad-based capital gains tax can have deterrent effects and so on. So these are all on the plans of the inner revenue. They have a 10-year plan. Okay. Now we are seeing a lot more tax cases going to the courts, which I think is a good thing because it gives us an opportunity of hearing the views of the judges. Of course, the problem sometimes is our judges are not trained in terms of tax law, they're trained in law in general, but so you can have different judges coming to different decisions, but nevertheless it's still useful. Information returns. That's what I mentioned earlier about the multinationals having the transfer pricing information return that came out recently. And I think it may indicate a trend towards the future that more information gathering could be done. Why? Because we are in the self-assessment system where when you don't file our tax returns, you don't file our tax computation, you file a tax return. Tax returns also collect information. And so the answer should be that this particular form should actually be in some ways built into the tax return. So next year's form, C, for companies will be a little bit longer, chances are, for multinationals. I mean, if we are arguing that why do you give us another form to fill when I already filled the Form C, then obviously you know the answer will be let's change the Form C and so make it one return but more information. And then the GST is something that's obviously coming. But what is not on the slide, a number of things that I thought I'll mention to you in the landscape in the next, this is in connection with the new economic model that we all know about. And the fact that the report has come out, part 1, part 2, from the new Economic Action Council, Economy Action Council on the new plan. We are going to see eventually, I mean this is not, this is my views. Government might change, it might be something else after that. So this is what we think will happen, is a low corporate tax rate of 20% ultimately. Tax incentives, this was already announced some time ago, tax incentives will be slowly curtailed by cutting down the exemption thresholds. We have 70% exemption, pioneer status might go down to 50. We have reinvestment allowance, which is now at 60%, might go down to 50, 40, 30, and it disappear. And we have shipping incentives, which will be curtailed and say, why exempt the whole shipping income under Section 54 capital A, maybe 50% exemption, the rest is taxable, things like that. These are easy to do actually, but progressively. So these are things that are happening because that will now allow the base to become a little bit wider. Okay? So therefore revenue will not be, by bringing the corporate tax rate down and slowly curtailing incentives, you will balance the revenue, the tax collections, all right? Personal tax rates, I think, will also follow that particular trend of being lowered ultimately to be the top rate. We all know that the top personal tax rate should be in line with the corporate tax rate based on economic principles and so on. So that will eventually happen. I do foresee that depending on the GST, that there'll be wider chargeable income bands and there will be a consolidation of all the personal reliefs that we have in the country over time. The suggestion to consolidate personal reliefs has already been made, and the professional bodies had a couple of engagements with authorities. It's a very sensitive thing, because you take away a relief, you might lose the elections. So be very, very careful. It may be a small little relief, but it might well lead to. So, it's a politically motivated, you've got to wait for the right time. But I think the principle of consolidating personal reliefs, because you've got so many personal reliefs, is something that the Inner Revenue Board is agreeable to, although the details are not spelled out, but the Ministry of Finance is a little bit wary about this because of political issues. The GST, of course, has to come on board before all I just mentioned happens. So it's actually meant to be a package that goes together, but happens over a period of time. Many of you have heard comments coming on the press, and we keep coming even from some very large firms saying that to introduce GST you must bring down the tax. That will never happen. Okay? I mean, this is a fundamental point. It can never happen because our system we already have a sales and service tax. So what is the GST? The GST is simply a substitution. It's very unlike other countries where it was totally new and they had to bring down the rates immediately. So it will happen for us over time, because if the GST functions well, that will lead to a commitment to eventually lower the corporate tax rates and personal tax rates. It's not going to happen overnight. Okay, so we're very unlike Singapore. We're very unlike some of the other countries which introduced the GST. So I just thought I'd make that point. It's a bit frustrating to keep hearing these points coming aboard, because if you do that, you will not see GST coming on board, because what is it going to do? You're going to bring down tax rates, you're going to introduce GST. What tax revenue increase are you talking about? You may even have a decrease initially. Some of the things that we are probably beginning to, we may see in this coming budget is 3 items, which again has been, I think, mentioned in some forums, those of you who have the opportunity to attend. Simple things to try to reduce what we call the cost of compliance. Things like, can we do away with the filing of personal tax returns? Yeah? And the answer to that is yes, for some cases. Yeah? For those who only have a single source of employment income, no other sources, you probably will see an announcement that we will allow non-filing. It means your deductions from your salaries will be considered your final tax. Yeah? But if you then want to file, you can file. You make an election, you want to opt to file, it's up to you. We cannot take away that right. You know, some of us become very sensitive. We used to file, but now you say I cannot file, how can? No, this is human nature. I've been doing this and I want to do it. So okay, we will give some kind of option, I think, to say you'll be allowed, because you might have more personal relief that, you know, that you wish to get a refund. That's fine. That could happen. But with conditions. The high, so-called higher earning individuals with employment income only may still be required to file. This is something the authorities are not willing to let go. I don't know why. But it's a start. The second thing that we think will happen is the period that we have for tax audits. You know, the law technically allows you to do it 6 years. We think that time frame for tax audits could be lowered to 4 years. But we think that will start administratively first to see how it works out before the law is amended. There's a reluctance to amend the law because once you amend the law, so anyway, it's a good thing. At least the authorities are positive to say, let's finish these audits within 4 years. That's it. That's how the Australian system is. And the other third thing is about if the authorities delay refunding what is due to me, will there be a compensation to me? The answer is there will be. But with some conditions. And to me, that's fine, because that's a positive thing. You know, the authorities, you know, years ago, all these things I just talked about was non-negotiable. Yeah, no such thing. And it's amazing how things have changed over the years. So we have to just keep at it. There will be compensation, but the issue has always been very tricky. Then they might change the penalty rates for, you know, if you delay paying or your installments are late, and they allow you a compensation. It will not be the same rates, okay? But that's also in line with international practice. The issue will be that if they do give you a compensation, it will be only kicks in after a certain time frame. For example, they say we refund to you in 90 days, then we allow 90 days. It's only if they go beyond 90 days, then the compensation starts. It doesn't start from day one. But to me, it's still positive. Yeah. So these are things that are already on the horizon. And of course, needless to say, we will see more public rulings coming out with the Inner Revenue Board's opinions and views and so on. And over time, we also are going to see our personal tax returns being pre-filled, pre-populated by the authorities, because certain information they have. They don't have to ask you to fill in information every time. It will come filled in, and then you can correct it. That's one of the ways of doing it. For example, you're looking at dividend income nowadays. If it's single-tier dividends exempt anyway. But some of the other dividend income that you get can be tied into the companies and to the CDS database, and they can actually pull this out and put it into your tax return. That's how internationally some countries do it. So this is pre-filling or pre-populating of a tax returns is something that will also happen. So the outlook on the future tax exchange, we talk about simplicity. Unfortunately, simplicity is relative. It will probably be greater complexity. There will be greater demands on both sides. One for information, the other for compensation. Yeah? We want compensation for delays. Inner Revenue wants more information so that they can do work better. We will see more litigation, which is good also. We will see a greater use of technology, that's a given. We'll see a flexibility in changing legislation. It doesn't have to be only confined to once a year.